We wanted to hop on here to talk about, should you be scared of what's going on in real estate? That's, the questions we're getting from our clients that are actually calling us. And we think there's a lot of you out there who are probably hitting the panic button, whether you're in the industry or not, about this market. Because obviously rates went up super, super high this month.
Obviously, we all know there's a lot of volatility in our financial world right now. So, I mean, with all that going on, bonds going every crazy.
Yeah.
We don't even know which way they're going. Up and down throughout the day.
The reality is the feds want to slow down the economy, right? They want to curb inflation. And I don't think, quite frankly, anybody really knows what's going on. And I know that can feel really, really, really scary when you're thinking about buying or selling a home. But the reality is real estate still has to be bought and sold. People still need a place to live. And there are things that are happening in people's lives that are causing them to have to sell their home. So first and foremost, let's talk about what effect this is really having on the real estate market and the reality of the interest rates going up.
First thing you're going to notice, days on market. Yes, they have gotten longer. And then with that, and obviously with the increase in interest rate, we're not seeing a run up in prices. 6 months ago, put it on the market, chances are buyers are running it up.
Yeah.
Even today, homes with multiple offers, they're not running up the price. There's still multiple offers on some of the properties that are priced properly, but they're not running the prices up. They're conscious, and with the interest rates higher, they are qualifying for less, so they don't have the room to push it.
Yeah, it's really affecting affordability. So interest rates, in my opinion, most importantly, are affecting affordability. People still want to buy a home, and people aren't scared necessarily of the prices. They're scared of their payment, because buyers live in the payment. Sellers live in the price. And so we're talking to our sellers about, number one, pricing to where the market will be, not where it was, right? So as realtors, as professionals, Harold and I have both sold in this market before. In fact, he started in a high interest rate market. I started in a high interest rate market. You have to price to where the prices are going, not where they've been. So if your neighbor just sold a home last week or last month, your home value is where they sold. Where 6 months ago, your home value was now ahead of theirs. We can't think like that anymore. You have to price your home according to this market. We have listings that are sitting and struggling. We have listings that are still selling. Sometimes it's a factor of community, location, type of home, price point. But properties are still moving. Some properties, days on market is extending.
And it varies. I mean, still that turnkey home price where it should be, it is still gone within days and probably multiple offers within a couple days for sure. So.
Yeah. The other thing that's really good about this market that I don't think a lot of people are really looking at is the opportunity for contingencies. So if you were a homeowner who wanted to buy another home in the pandemic market, you were scared to death to put your home on the market because you wouldn't have anywhere to go. You'd have to move in with family or friends or a hotel or an Airbnb, and a lot of people just didn't want to do that. So now, if you have a home that you want to sell and you want to buy another one, there is a seller out there who's willing to wait for you now to sell your home. We're going to start seeing multiple contingencies stacked upon each other. When I first started in my career, the record I had was seven transactions where there was a top client and a bottom client, and there was 5 other transactions going on in between that were all relying on each other. This market, all those things we just talked about, right? Pricing your home properly. It's not going to sell in a day. Days on market is going to be extended. It requires a professional. It requires a professional who has negotiation skills, who has marketing skills, who understands how to price and strategize with you. That's really what this market's going to take. It's going to take a professional. The pandemic market, as my attorney says, even turkeys can fly in a hurricane, right?
That was a unique market.
It definitely was a unique market. And so now it's like we have to understand that don't hit the panic button, friends. Don't hit the panic button. We've had 7% interest rates before. Our first home was almost 7%, 6.75 I think our first was, but our second was like 10.5.
It was a lot higher than what it is today.
Yeah. So the other thing is there's no way to time the market. We keep having people say, I'm not going to buy till it comes down. Well, what? Rates are going to be 9% and when the prices come down? I mean, I hope they don't get to 9%, but they could.
The rates are ultimately going to drive our prices down if they continue to rise. And they have risen very quickly in the last couple months, obviously, to get a little over 7% the other day. But with that is when the prices drop a little bit, and let's just say rates do drop to 5%. You're not the only one jumping back into market. So here comes the competition again. And before you know it, the prices are above where you could bought it before.
Yeah. There's no way to time the market. I always say, do you know how to time the stock market? Unless you have...
Insider trick.
There's no insider anything in real estate. No. We're not sitting in the Fed's office. We're not in the Fed's meetings. We're not controlling the bond market. We're not controlling inflation. We don't have insider knowledge. When people ask us, when's the best time to buy? People want to buy at the bottom and they want to sell at the top. Some people luck out and end up doing it, but they do it unknowingly. They can tell you they planned it. No, they did not. Right? You can't time it. You can't time the stock market. You can't time the real estate market. I will still go with what I've always said my entire career. The best time for you to buy a home is when you want to buy a home and you can qualify. That's the best time to buy a home because you're going to miss out on so much, potentially miss out on so much if you sit around and wait to try to time the market.
In real estate, it's a long-term game. I mean, we've known that. It's you buy and hold. That's how it's done. And as long as you can afford your payment, you're going to be able to ride out the storm till it comes time.
Now, if you come to Harold and I today and you say you want to buy a home, but you're going to move out of state in 2 years, I'm going to tell you not to buy a home. You tell me you're going to be here 3 to 5 to 7 years, you should buy a home. You should buy a home and buy a home that you can afford in an area you love, that you're comfortable with the payment.
Exactly. And then, I mean, we're talking about buyers now, so we're going to kind of jump over there for buyers. Right now is a great time. There's a lot less buyers out there than there was in the past. What we're also seeing is we are actually seeing concessions. We are seeing price reductions on some homes that are overpriced, whether it's condition, location. I mean, we got the criteria of why they are. And it's a great time to not stress of competing against 20 buyers. You will have competition out there. There are buyers out there. In fact, the last 2 weeks, we've closed three buyers.
Yeah.
Single.
And you know what else is happening is we're also seeing that negotiations are back, right? So like repairs, like you just did a repair request where I know you went back and forth a couple times.
3 times.
And that wasn't happening 6 months ago. People weren't getting, dishwashers replaced. They weren't getting electrical issues fixed. They weren't getting credits for things that the seller wasn't aware were going on with their home, like a leaky pipe underneath the house. That wasn't happening. It was just like, have your home inspection. You know what's wrong with the property. Take it. That's not happening anymore. Now we're actually seeing people get what we call concessions on the property for different reasons, which is a good thing. It's a good thing to be a buyer right now. You can move at a slower pace. You can take a deep breath, and you can really benefit from some of the changes in the market.
Right. And then to the sellers, this is when we come in and we stress it's so important is to get this home ready to go on the market.
Yes.
That is fixing things. That is cleaning up, decluttering. You have to prepare it because the buyers are going to be picky. They have time to think about what they're going to do.
Yeah, we're seeing multiple showings again, or people are coming back more than one time. People are not just walking in the home, looking at it for 5 minutes and saying, yeah, I'll take this one.
Nope.
No, that's not happening anymore. So you have to be prepared. You have to have a professional. The sellers and buyers who are the most prepared will win in this market, period. FHA just did a huge announcement that we are so excited about. It is really good for first-time home buyers. So anybody listening out there that's a first-time home buyer or knows a first-time home buyer, starting in October, I believe it's case numbers that are required after September 21st but can't close until sometime in October. I'm not sure the exact dates. Don't quote me on it. But FHA has just come out and said that they finally will accept and consider 12 months of positive rental income history as a credit guideline or a credit enhancement to qualifying for the loan. So FHA uses kind of an overall home buyer scoring system that factors in credit, factors in employment, factors in debt to income, all the things. And this will now be factored into this formula. And so you'll have to provide 12 months of verified rental history, payment history to your lender of choice. And then that will be factored into your qualifying, because there's so many first-time home buyers who don't have a ton of credit cards, which we don't want you to have. They maybe have a car payment, and that's it. And they don't have a mortgage, of course, because they're a first-time home buyer. And so this will help. I'm very excited for first-time home buyers because it really is hard to get into the market for the first time and qualify on your own. It's why a lot of first-time home buyers need co-signers sometimes. So hopefully this will help that. And you deal with a ton of first-time home buyers. This is going to be great for them.
I think what this will really help will be the younger ones that really want to buy that home, because let's face it, it takes time to build credit.
Yeah.
I mean, even when you're in your 30s,
yeah,
you still may not have built your credit up to where it needs to be. So
yeah. Yeah.
it's going to help a lot of, especially the younger ones, or people that have actually had rough issues in the past that have cleaned it up.
Yes.
And now they can prove, like, look, I for a full year, obviously they can see on the credit report, and then they take into account the on-time
the rental history. Yeah. And I think that's a really, really great point. And here's the last thing to talk about when we talk about interest rates going up and we talk about, yes, affordability is being strained. But here's the one thing people are forgetting. Rents are going up at the fastest pace we've seen in recorded history. I think I heard the other day 36% in some area rents are up, and they're slated to go even higher. That's something that you as a renter really need to look at. If you can qualify for a home and you're looking at your rents going up 30%, I think I would really, really, really take a close look at, because that is definitely going to affect your financial future if you have to continue renting.
It will make it very difficult. Obviously, when you own the home, your payment, as long as you have a 30-year fixed, is fixed for 30 years.
Yeah.
360 months.
Yeah. And quite frankly, even if right now the 10-year loans and the 7-year loans aren't necessarily more favorable to the 30-year, they say they might get there. Even if you can get into a 7 or 10-year, right? You're not guaranteed that your landlord won't raise your rent for 10 years, but you are guaranteed in your mortgage that your payment won't increase for those 10 years. And then remember, the last thing that I want to chat about when we're talking about buying a home is, remember that every single month, your payment's up here, and every single month you are paying yourself back a principal reduction. A portion of your payment is going back in your pocket because that balance is going to continue to decrease. Now, hopefully at the same time we see the market increase. Now, it's not going to increase as it did before. It's not going to go way up here. It might go right here. But you're continuing to pay down your home at the same rate regardless of what the market does. And eventually that gap gets bigger and bigger and bigger and bigger. And then this gap in between is equity. It's wealth. It's money you have in your net worth. And the only way I know to do that in a responsible, controlled, pretty much risk-proof, because everything has risk, but it's far less risk than some of the other financial vehicles that are out there.
When you are paying your rent, you're paying somebody else's mortgage. Mm-hmm. That's ultimately what you're doing. Yeah. Versus if you own, you're paying your own mortgage. Mm-hmm. And in time, you'll get it back.
Yep. There's options out there. There's condos. There's smaller single-family homes. There's areas that aren't appreciating as fast, and we're already seeing some price softening in those areas. There's opportunities. It's about you making it a priority that it's important for you to buy a home, own a piece of the California dream. And again, move up buyers, I think you have it's hard to let go of that low interest rate you have on your mortgage. I understand. We have a low interest rate on our home. It's hard to even think about letting that go. But if I could move where I want to move and do what I want to do, and I qualified, I would really look at that really hard right now.
And I add one more thing in there for buyers is what we are seeing and what we're actually seeing work and help the buyers is the rate buy down in the form of a closing cost. Cannot be paid. Well, there are two forms. You can buy your rate down as a buyer, but there's also other programs out there where the seller can credit you, so that is a concession, mm-hmm. and you are able to use that as a rate buy down. There's different programs out there. You would have to talk to your lender.
Yep.
Typically, we see a 2-year rate buy down, so 2 years for the first year, it's 2% less than the qualified rate. The following year, it's 1% less, and then that third year, it goes for the rate, and you actually qualify for that rate. So they're just preparing you. But
you're easing into the payment.
And then in the meantime, if you see any kind of rate decrease in those 3 years, you refi out of it and you go into another loan with a fixed rate and you're good to go.
Yeah. Thing is, there's options. Don't let the rate scare you. Again, get your affordability looked at, get your qualifications looked at by a lender. Don't let the rate scare you. You might be pleasantly surprised. And here's the other deal. Yes, I understand that going from, okay, let's just say 2 and 3% was crazy sauce anyways. 4.5 is really where I like it. It's not there right now, but I like it there. So let's just say 4.5 to 7. That's a 2.5% increase in rate. It sounds like a ton of money. Depending on your loan amount, depending on your program, it may not be. And so yes, does 7% interest rate sound scary? Okay, yes, it does. But in comparison to what? You have to look at that monthly payment and how much does it actually change? And then you have to look at your own budgeting and say, can I sacrifice X, Y, and Z to afford a $75 more a month payment, or 100, 125, whatever it may be? I think it's really, really, really important to look at it from just a different perspective. All right, guys, we hope this update was very helpful for you. Again, if you guys ever have any questions, Harold and I are always here. You know how to reach us. Send us a DM, send us a text message. We really, really need your support. So if you know someone out there who's looking to buy or sell real estate in California, in Southern California, in the Long Beach, Orange County, and LA areas, I would throw in there Riverside, Inland Empire, and Palm Desert, because I do have agents that service those areas. We would love your introduction to your friends and family. The easiest way to do it is send us a group text message and say, hey, Barb and Harold, I want you to meet my cousin Sally. Cousin Sally's looking to buy a home. She's super excited, nervous, scared. We know you're the best. We know you'll take great care of them. Connect us together, and then we're going to get in touch with cousin Sally, and we're going to get the ball rolling. That's how we do it. So we'd love your support. We're here to support you. You have any questions at any time about anything housing related, real estate market related, we can help you. All right, bye friends. Have a great afternoon.